term for him. Anyway, let's take it down. This is a long vid, but I think a lot of people need to hear what I've got to say here. So that was why we were in there, and that's why we got short. Can we still be wrong and it doesn't make our targets? Absolutely. It's a probability game, but this zone is calling. This zone is calling. Go. We use volume by price in a very specific way, and as I say, specifically around our setups. So you can learn about that in our premium area. Go to the website, book a call. If you value investing, learning, and recognizing deep-seated psychological change will come your way as well. You'll be a better person. Becoming a better trader is a transformational journey of self. If you recognize all that. If you don't, and you're just wanting to pay someone to make you rich, you're going to be disappointed. Anyway, as we come through here, down these levels, that's where we'd expect to see a target. But could we be wrong? This could turn and pump. It's possible. I don't feel it, and I think we're in a good way, and I think there's more to come. Is there a bit of pushback? Yes, there is. Was the volume all-encompassing? I'd prefer more, but there's not enough here to cause me great concern, and the game is staying to the plan. Once you've got the major inflection point, you need to just stick and ride. So we give you a bit of histogram volume. You can see that relative to the other big turning points, this was a killer. That was the final twist of the knife that absolutely murdered people. That's why it was high volume. And of course, the December was one of the biggest bull runs. In that year alone, you came in at $1,000 and checked out at 20. Never mind what you'd built in the 2 years before that of that bull market. So that was a big bull, and a big bull, big continuation pattern, and a big shake of the head. Lots of pain for those that didn't understand the bear market that took you down 85% for Bitcoin, 85%, 95% plus for most alts. Okay, so in our view, you'll be tracking back down to this zone over here. There will be pushback at this zone. I think there might be small time frame pushback, but let's just talk at the weekly level. What are you going to get? You may get rising wedge and then a sell-off, more, and then you're going to start hitting this high volume by price zone, and then you might have a little bit of basing. You're going to have early bottom callers, almost guaranteed at this level. They may turn out to be right. I won't be the first, just like I wasn't the first to go long. I didn't get long there. I got long there probably. But the volume came and then it confirmed and we had the structure. But there is a chance you might go a little deeper. There is a chance you might go a little deeper. We'll wait and see. We'll see what the price behavior is giving for us. If we're to break 21, remember this is 17. That was 18. Quite interesting pattern here for you, by the way. December 17. Kind of end of the year. This is end of the year, the bear market in essence here. So it was the beginning of 19. So it was kind of December 18, the lows. Then you went continuation pattern. You also had long continuation. Part of that was long continuation pattern. Then you went first in an uptrend continuation pattern. That's how long it took. Now you've gone mid-year, July 19 was your high-ish. A little bit before. It's kind of June, end of June. But so you've got a 1 year cycle, top to low. You've got a 6 month cycle because yeah, you kind of bottomed a bit. It's about 6 months because it was more June-ish, the top. You can see it there. So 6 months, and now you're going to see how long. I would say time frame wise, you're probably going to look at somewhere between 3 months and 6 months. It won't be as long as 6 months, I don't think, but in the worst case, it might be for the absolute low. I would stack myself on the 3 to 4.5 month from this late June high. So let's call it 1st of July, and you're looking for, you've had a long period of continuation that has chewed up quite a bit of time. Note, in all of these cases, you had a July to November. So let me change color here, because this is quite an interesting observation. within this total time frame of this high to eventual low, you had quite a large period, which was the bit most people get wrong, of continuation or structure formation. This was continuation of that little bull trend. So it's still to us a continuation pattern, but it's a continuation of a new bull. Continuation. And you've just had continuation also of that trend change, the rejection at 13.9, and that was the rejection of the 3.2 up. So they're all, for me, continuation, although that's first in a new trend and that was first. These were twins. The only difference that was in them when you did the inversion, and I did the inversion with you, is that this was a low volatility, which is very typical of basing out, and this was a high volatility version. So when you invert the two charts, they're almost similar. This became a descending triangle, and that became an ascending triangle, only this was a very choppy, thrashy one, and this was one that went very low vol. Look at this period here during that continuation. Low vol until the break. Anyway, so what you've actually got is you've already had, since this point, and let's just remind ourselves what that date is for us. From 15th of July till the point when we broke. We broke essentially a day and a half ago to September. So mid-July, mid-August, and half a month. So you've got 1.5 months of continuation here within your next cycle. This period was, the low was in and around December, and you only broke in April. That was mid-April or beginning of April. So mid-December to end of March, you had basically 3.5 months of continuation there. This one started for me over here mid-May and broke in November. Mid-November. So that's 5 to 11. This was 6 months. So you got 6 months, 3.5 months, and 1.5 months of continuation. Can you see how it's compressing? The time frames are compressing, and we're going to, the big cycle takes much longer to form rather than the third and final cycle. And we've got for ourselves here a high 2 and a high 1. We had our low 1 in there. This is a proper child's crayon adventure, if you're still following me. And actually we're waiting now for that low 2, which in my opinion will come before our low 1. So more colors to make it more exotic. That's where we think. That's where we think. So where will this orange dot be? That's it for me. Well, let me include the numbers so that you can see it. And we have our hot spots that we know. So overall, you've got, I would think that you're going to be looking at, you had 3.5 months. This was a 6-month spell. You had 3.5 months of continuation. That was a 6-month, but it was a year sell-off. So 50% was continuation pattern of this cycle from the high to the low. Almost. 6 months, slightly high. It's probably about 5.5. You had 3.5 of this one. That was a 6-month cycle. It's also close to 50%. 6 months, you ended up having 50% was continuation and 50% was the new swinging move. Now you had a little bit of sell-off, continuation, and now we're into sell-off again. You had 1.5 months of continuation. You had 3.5, you had 6. So that's why I start the clock here around 3 months. 3 months from this high. From then until around, I think, the 4.5 month is when we should base out. So this orange dot should occur in that period for me. For it to be 4.5 months in total, this cycle. So once again, where was that high? There he was. take that line away, do it again. You made it in June 24. The previous one was a 6-month cycle, and I'm thinking you're going to be done certainly before, you'll have made the low certainly before 6 months. That's my long stop date to June. That would be 24 December. That's end of the year. You know, this is a December, end of the December. So 24 June, before Christmas, you'll be through your low 2 safely. And I think 4.5 months from your 24 June. So 4 onto 6 makes October, half again, going to take you mid-November. My guesstimation is mid-November, you're going to be in and around this final low. So that orange dot needs time-wise to be there, roughly. It's now just a question of how much damage occurs there. Do you dip this low? Do you dip this low? Or do you dip even lower still? Somewhere in that range on that time point is where I suggest to you that point will occur. So you actually have a grid now. I'm going to remove this now because that's quite a messy old draw. But you actually have a grid from me giving you an idea that my best guess is around mid-November. You want to probably start thinking, subject to price action, and you got to do it in between that 6.8 range and that 4.950 range. So I'll take beginning November, end of the year, X marks the spot. Mid-November is going to be, this is actually 2 months because it takes you to the end of the year. So mid-November is going to be around there. And our target of 6.8 is going to be around there. A little bit of overperformance possible. So that's the spot in terms of where we are. And at that juncture, I will think and assess. And you may find you start to set up some form of basing out structure. At some point to those price levels and around that time. If that's not useful, then I'm not serving you. If you're not following Twitter, you're going to miss out a lot of insight. The Crypto Sniper. Okay, so we can drop down. It's already a long YouTube. Learn to watch what I do at 2x, but I prefer to do it properly. I can't half do stuff. So people that say your YouTubes are too long, if you don't watch a YouTube because it's too long, you're probably not learning much. You're looking for sound bites, quick hits, and a bunch of stuff. So this is, I'll always be a teacher, and I'll always be here to help people. But the best teaching are for those that respect it. But I certainly give quite a bit away of take. So there you go. During November month, in that price range, that's going to be a likely turning point. Can't get more useful than that. Dropping down here, this was in essence how we use grind line theory, and it also perfectly dovetailed with a number of other confluencing levels that we do in HVF method, which had us feeling quite comfy. Decent volume without spectacular, but you were higher when you had the initial break way down in April. You were higher, and you can't ignore blow off highs with big volume, guys. This was a trend change event. Even though it came in a falling wedge that generated a reaction, it was a trend change event. That was a slap in the face, as we call it. That set up the first downside, and the first are the best. And this, by the way, is more likely a pennant than anything else, which means you're more likely to see further downside. Simple as that. Fight it if you will. I'm needing some greater recognition on the crypto side and the calls that we make. We got quite low scores, actually. Please share and like. It's the only way you can help us. We'll be talking at the Dollar Vigilante. The Crypto Sniper side isn't getting the respect the Market Sniper gets. It's a longer running Twitter handle and things. But I would appreciate if you share, like, retweets are most appreciated. And it's the way you can say thank you if there's anything useful in here for you and you're watching it. What else have I got for you? So this is on balance of probabilities continuation. Note the volatility comes back down, starts heading back down. And what will likely happen is that you'll probably sell off a little more. You could get a greater stage of volume because here's the thing. I'm not sure enough people have got out of the game of their leverage longs. They still think, I bought below 10K. It was last chance. It was last chance bargains. It's nothing like recording a YouTube for the gardeners to show up and start doing some sawing. So how those shorts? They have dropped in volume. The shorts are very low. The minute shorts start making money, they shut them and run. That's it. In other words, we let losses run. And the minute we're up, we snatch it and run for the door. It's like stealing a 1-1 draw because you weren't expecting to beat the Man United reserve team when actually you could have hammered them 6-0. And they're fielding a bunch of kids that still don't know their arse from their elbow. BitMEX is 50-50. Oh, that's Ethereum. Why am I looking at Ethereum? So let's have a look at this. Shorts are still less than half the longs. Oh, 68. That looks like golden mean is long. The 68 percentile are long. No, it isn't. It should be the 61.8, but my dyslexic eyeball saw 68.1. 220. It's too much. What are you going to do? It's sold off. Are you going to stay leverage long? BitMEX leverage longs are now 50-50. Still slightly in favor of the longs. And if you have a real sustained move here, didn't ask that to happen. If you have a real sustained move, it's going to hurt. 509 to 386. Still leverage longs holding on. You need a washout. And by the way, on alts, you need a bigger washout. On alts, you need a bigger washout. And this is what no one got. When you're calling the alt run, everyone was sitting there saying, why, when you're calling the alt run? I'm not calling the alt run. The alt was never in a bull. What the hell happened, you guys? Oh, but the alts are going to start running. The alts are going to start running. The alts weren't in a bull. Let's get this clear. Excuse the background noise, guys. Go back to daily, you nasty. This chart's very sketchy, but let's just be clear to you. This includes some of the better alts that did have a little bit of a run. It'll have Binance in it. It'll have a whole bunch of stuff. See all my draws coming in. You see that red zone? I'm in a logarithmic chart. Let me just reality check you here. Your very highest peak that you couldn't hold for one close on one daily time frame never got you out of the bloodbath zone. That is the 0 to 23.6%. Let me say that again for the alt bull market guys. This is about as dead cat bounce as dropping a dead steamroller flattened cat that's baked in the sun for 4 weeks, dropped off the Empire State Building might bounce. You'll get around 20% bounce from up on high, even if it's flattened like a sheet of paper. That wasn't a bull market. That is not a bull market next to that. People don't understand how far you've got to retrace to actually have a credible bull market. And this includes Litecoin and BNB. Go do this again with some of the likes of, I don't know, let's just for fun, take EOS. A lot of guys are in EOS. So here you go, EOS. EOS had this secondary bull that everyone switched into alts when there was a massive bear market into play because one coin was going, it actually got into the yellow zone. It's still hopeless. You've got to run at least the 38.2, and ideally for a proper pullback for macro bulls, you should be through the 50 and 61.8. It stuck its nose out of the bloodbath into a little bit of custard for a small while, and that's where it is right now. This was a rally. This was a rally. Yes, it took out previous secondary highs, but this was just a bigger time frame rally. Look at this channel I drew on it. You popped out the top, you came back in, you died. That's the story. If you're trading on this on any bigger time frame than 15 or 30 minutes, you should realize that that was never a bull market. And this isn't the worst one. This really isn't the worst one. Let's just refresh this for you. So positive values and alts doing better than Bitcoin on this meaningless period that is probably a pennant that's going to probably resolve in a new sell-off point that will see Bitcoin going down and these going down even more. I mean, XRP. Outside of Ethereum, this is the most significant alt. Let's talk about its bull market since the high when it traded at $3.3. Do you know where the low was? It was December, guys. So there's a low there for Ripple. You never even threatened. Here's where everything else was bottoming. This was the December 2019 low. So up to here, Bitcoin started to turn. So that is the lowest point. This right here is the lowest point, guys. This is your third biggest by market cap coin. Your third biggest by market cap coin. That was the end for Bitcoin of the market. That is your lowest point. I've taken you 100% fib from your all-time high at $3.3, and I'm showing you where you are today. You didn't once threaten. Take that spike out of the way. You actually stayed in the lower half of the bloodbath with all the offal, the kidneys, the livers, and all the other slaughtered innards of retail traders that are spewed into this bottomless, smelling, petulant pit. That's where Ripple has hung. And it's squeezed to the downside, and I've told everyone that it'll run that upside HVF funnel that you are getting the benefit of seeing to the downside, which is 19 cents, and it will run through that in time. Where is the alt bull market that the alts were going to start outperforming Bitcoin? It never happened. It never happened. That's what we were saying to you. You had a Bitcoin based rally. The alts bull market never happened. It got a rally on the account of the benefits that Bitcoin's strength brought. The money did not come in for alts. The money did not come in for alts. Okay, it's a long clip. I'm going to divide it in parts. The Crypto Sniper, at the Crypto Sniper. You are missing alert updates. Anything that I do of alert update will go through there. I can't YouTube all the time. I'm going to be on motorcycles. Going Bitcoin short means I've gone long on motorcycles and lifestyle, and I love it, and I'm enjoying it. You could be doing it too. And you should also include some precious metals and other more practical, non-depreciating assets, unlike motorcycles, in your portfolio. But I'll see you on the other side. Enjoy this clip. Take what you can from it and recognize, don't play the alts right now. There's a washout needed, in my view. Will there be select individual winners? Will I be wrong on certain individual players that might get a whole bunch of hype and really do stuff? Absolutely. But are you expecting to be the one guy that picks that one and does it well? I wouldn't bother. I'm expecting BTC dominance to reclimb up and potentially set up another continuation pattern to the upside. We'll see. Of course, it's pulling back while we're pausing. Watch what happens next if we take another dive lower. Could be wrong on all the things I've said, but I feel a reasonable degree of confidence that we're going to be right. Okay. With that, I salute you from Georgia, and enjoy the Rugby World Cup if you have a few moments. Crap on the referees because they've been awful, but otherwise just have a good time. Be a lifestyle trader, and I'll see you on the other side.